Meanwhile, stocks are down in excess of 75 points. The latest catalyst for this sell-off, if you want to buy it, is a Bloomberg report that has tax cuts, corporate tax cuts being phased in over 5 years. In other words, the corporate rate, now 35%, would go down to 20%, but it wouldn't happen right away. There's also some talk out there that given the Home Builders Association nixing this agreement, what little they know of it, on the fact that we just talked to the guy who heads it, and that it's going to take a lot for him to change his mind. In fact, virtually impossible unless they change their allowance for mortgage interest deductions and the rest, that this could be facing some serious headwinds. To Fox Business's Charlie Gasparino and Americans for Tax Reform President Grover Norquist. Grover, is this thing in trouble?
No, this is exactly what you should expect. Everybody who wanted something extra in the tax bill for themselves and didn't get it is going to throw a minor hissy fit. The votes are there for fundamental tax reform. The earlier part that you make, delaying the phase-in, that would be a disaster, both politically and economically. We delayed the Reagan tax cuts phase-in from 81 to 82 to 83, and the recovery started in January of 83, which was almost a year after the 82 election, where the Republicans got hammered because you didn't have growth. So you want the election after the rates come down, which means you want the rates to come down before, way before the November 2018 election. A delay is foolish. I don't think they'll do it. They're old enough to have lived through the Reagan tax cuts, where delayed cost Republicans House and Senate seats. So I don't think that'll happen. But look, lots of trade associations are going to complain that they want their thing in. There'll be a tax cut every year you have a Republican House and Senate and presidency. If you didn't get in this time, come back next time, but be a team player and help get this across the finish line.
Apparently part of the thinking here, Charlie, was to get people who are worried about deficits, debt on board and support this. Not even so much an overture to Democrats, just Republicans are leery of this. What do you think?
Well, I like to hear what Grover has to say about not just the corporate tax side, which could be a disaster if they do this thing, but on the individual tax rates. Let's just be real clear here. They're talking about 5 rates now. They're talking about a millionaire's tax. They're talking about getting rid of all these deductions and raising taxes at essentially
on the upper income.
On the upper, the people who pay most of the taxes. I mean, I don't know why that's good economic policy. And
if they go through with that, Grover, he raised a good point. I mean, the Wall Street Journal spelled out the possibility of losing those deductions as well as hiking the top rate to 42%. But what do you think of that?
Well, first of all, there are going to be lots of things that are discussed. There are many staff members on the committee. There are many members of the committee. All of them have staff. And people get phone calls where the press are desperate for something. And it's true, they might do X, they might do Y. That's not lying. It's probably true.
I think it was a trial balloon, and they're going to make you grateful if it goes down to 40%.
Grover, where do you think it ends up on the individual side? I'd like to. You're down there. You know what the swamp is saying.
They may not reduce the top rate or only reduce it a little bit. They're supposed to take it to 35 from 39.6. The idea of raising it, which would require every Republican to vote for a rate tax increase, I think is unlikely and would be suicidal, since 90% of the Republicans in the House and Senate have signed a pledge not to raise tax rates.
But they've also said this is going to be a middle-class tax cut, and the only way you can kind of do the math in their way, because they're not willing to cut spending, is to curb the benefits for the rich, right?
Yeah, they've said a lot of things, and the president said some things, and House and Senate people. The most important thing the president has said and the House and Senate leadership have said is their job here is to create economic growth and jobs and growth and growth and growth. And everything that hurts growth, no matter how cute it looks in an op-ed, oh, look, we're not cutting taxes on rich people, none of that matters once the bill's passed. Once the bill is passed and enacted, the only thing that matters is, did it bring growth?
Well, but the noise, the problem is, listen, I agree with everything Grover's saying, but the noise coming out of what they're talking about seems so absurd, particularly on the individual side. I haven't heard, I didn't see the Bloomberg report about the phase-in of the corporate tax. I think that's really bad, because I think businesses now are factoring in that sort of
and anything phased in can be phased out.
Then the market reverses a little bit, or a lot maybe. But on the individual side, it's really scary that they're actually thinking of like sticking it to people who pay most of the taxes, and that's good for economic growth. The one thing I will say is this. Donald Trump did not run on, he liked Larry Kudlow's and Art Laffer's plan, which brought down the rates, but he really ran as a populist, and he wants a win here.
Yeah, I don't think he's the supply side. I want to bring Heather Zumarraga into the Decision 4 Fund Distributors Vice President. Heather, if you had to handicap where this whole tax cut thing is going and whether we will get one voted on and approved by the end of this year, what do you think?
I think we will get something done by the end of this year. I think that corporate rate is very important from a market standpoint and giving investors what they want to match some expectations that we've had, whether you believe the market is propped up all on the basis of tax reform since President Trump was elected or not. You got to agree that some of it was.
So let me ask you, Charlie, I quoted this item in Barron's over the weekend that said the bull wasn't born of tax considerations and it won't die from lack of tax relief. In other words, this market rally will sustain itself and won't tumble if this thing doesn't materialize.
I don't know. I think that was I think they're like a month behind the ball. I mean, listen, initially, and I think I spoke to you about this,
right.
This market was being propelled by the fact that even without tax cuts, Donald Trump is better than Hillary Clinton from a regulatory standpoint. Yeah. He's not going to raise taxes. I think,
well,
okay, so but now, in the last couple of weeks...
He's raising taxes on you, Charlie, on the rich, right? That's what the Dems say.
Yes, possibly, yes, possibly. We'll know when, by the way, Wednesday we'll know. We'll know when the details
But I think now, I mean, I'm sensing when I talk to traders and investors, institutional investors, that there is a pricing of tax cuts that's in this market. Because and I think if they don't get us something good, I'm not saying it could be marginal, and I think it'd be okay. But I think if it's bad, if they really do raise taxes on the quote-unquote rich who spend most of the money in this country, and if they phase in the corporate tax rate, I think you got to have a market impact because the market right now.
Some of the biggest taxes we've known, like Reagan's and all, to Grover's point, were phased in, but.
You remember, you're starting off of a low.
Absolutely.
That was a bounce off a bottom because you had very high interest rates at the time. People were out of stocks and they were putting their money into bonds. And
that's fascinating.
Remember money market funds?
Oh yeah,
20%. Wouldn't you give your left, for a 20% one year interest?
Let me get a sense, Grover, where you think this is going then, because let's say it's delayed. I mean, one of the things I think being lost in this discussion is no one's talking about retroactive tax cuts this year now. That seems to be out. Now, I don't know if that's going to make a big difference, but what do you make of that?
I tend to think that less of it will be retroactive. They've given themselves less space for overall spending tax reduction in this package. But the parameters that were laid out, the dramatically lower corporate rates, the lower rates for Subchapter S pass-throughs, the individual lower rates, including the top level, I think these will hold. It is what everyone agreed to when they voted for this package. And there'll be a lot of back and forth and a lot of people leaking things that are or are not true or might be, true under certain circumstances. But this measure is going to pass because the Republicans have to get it done for political reasons. The economy needs it as well. It could be better, it could be worse, depending on how they draw it. But there's no pressure in the Republican Party to raise tax rates on individuals. The effort is all the other direction.
They've grabbed defeat from the jaws of victory before. Yeah. So, Heather, I guess what I'd ask you...
It's not impossible.
No, you're right. Is it your understanding that the people you talk to are still confident that a deal, some sort of a deal, gets done, the president signs off on it, and this rally continues?
Absolutely, and we'll hear more about that on Wednesday, of course. But I do think the markets can head higher if we get tax reform, and if not, it will head lower in the opposite direction by at least 10 to 15%, I think. So you will see a volatile move. You're not going to see a market that's consolidating, and that's what's up next.